Hey guys, welcome back to the channel. What I'm going to say today might sound very bullish to you, but at the same time could be very bearish news. 2026 will be one of the most exciting and explosive years for crypto that we've ever seen, but it will also set the stage for a deep global depression shortly after. And if you understand why, you would know how to position yourself instead of being the exit liquidity. And even today on Discord, I posted something that we've been in extreme fear for way too long right now, for a couple of months in a row. And if you want to have access to the latest news, the market sentiment, dominance, buy and sell alerts, research group, feel free to join Discord. I will be very happy to welcome you as part of our community. And going back now to Bitcoin quarterly returns, I want to show you that right now if you look at CoinGlass, we have one of the worst Q4s for Bitcoin that we've ever had in the history, minus 23%. The only worst quarter is back in 2018 bear market where we had minus 42% and above. So we're having one of the worst Q4s for Bitcoin and of course for the altcoins as well. And that's because of liquidity. Crypto doesn't move because of hype, it moves because of liquidity. And right now we have the liquidity being dried up, and I'll tell you why shortly. But as you know, every major bull run or rally in crypto has one thing in common. It needs money printing, it needs loose financial conditions, and it needs central banks injecting liquidity in the system. If there is no liquidity, there is no bull market. Simple as that. And right now, the world is heading towards another massive liquidity wave in 2026. And why? Because US is in trouble. The US debt problem is out of control. And let's talk about the US debt. The United States, is sitting on historic levels of debt. Interest payments alone are becoming unmanageable. And the problem is that governments cannot cut on spending fast enough. They can't raise taxes enough. And it can't afford high interest rates either. So the only option to solve this temporarily is printing money. Not because they want to, but because they have to. There is no other option. And quantitative easing that everyone talks about and that is coming back in 2026 was never temporary. It's a tool that governments use when the system is about to break, when the system is about to crash, as growth slows, unemployment rises, and debt refinancing becomes impossible. So central banks step in and say, we need to support the economy. When they say that, that means that we will see buying bonds, injecting liquidity, expanding balance sheets, and devaluing fiat currencies. This is the rocket fuel for risk assets. And crypto is one of the most sensitive assets to liquidity on earth. That's why I expect 2026 to be very bullish for crypto, because when quantitative easing starts and returns, Bitcoin benefits first usually, then Ethereum, then we see large caps, and finally altcoins exploding. This is where we would see different narratives, 10x, 20x on projects, even more sometimes. Not because fundamentals changed overnight, but because money is flooding the system. So I think 2026 will feel very euphoric, it will feel very unstoppable. But this is actually the moment where we need to be very cautious, because everyone will say, oh, this time is different. But this is exactly when we need to start thinking, planning, and be careful, because there is always a dark side to it. All of this situation that we have right now, macroeconomic status, most people won't tell you that money printing doesn't solve problems at all. It actually delays them. That's the only thing that money printing does. It delays the problem. All that debt, all that inefficiencies, eventually it catches up. It doesn't disappear. So when we have excessive or additional money printing, that leads to asset bubbles, it leads to massive wealth inequality, and it leads to currency debasement. And finally, it leads to economic collapse. So, and history shows this very clearly to us. So while 2026 I expect to be very bullish, explosive, I see that being just for short term, over the span of a couple of months. And eventually that could be the final liquidity-driven rally before we go into a global deeper depression, where we would see all those asset bubbles bursting. And if we look at Bitcoin's price right now, I know a lot of you were discussing this on Discord, people are starting to question, to doubt where we are heading to. Right now the crypto market feels painful. I know that. Price action is choppy, sentiment is weak, which is something we discussed at the start of this video. We've been in extreme fear for long. And a lot of people are doubting, they're running away. But the question that we should be asking ourselves right now, is this a real risk, or this is just a short-term noise? In the short term, the market is under pressure. That's undeniable. We can see that. And there is a real reasons for it. We had the government shutdown, which dried up liquidity, especially in the crypto markets. Now we have the Bank of Japan rate hike. which is a real risk. Historically, when the Bank of Japan tightens, risk assets suffer. And the last few times this happened, Bitcoin saw 20-30% drawdowns, which is what we are seeing right now again. Second, from a technical perspective, for those who are trading, we printed the first CME dead cross. And if you look from technical perspective for those trading, that's bearish, and of course traders are reacting to it. Third, social interest has collapsed. Search trends are down, engagement is very low, volume has dried up, and when volume disappears, volatility spikes. We see a lot of liquidations everywhere, over leveraged longs are getting wiped out, weak hands are being forced to sell, and fear spreads fast. So yes, in the short term, the market is uncomfortable, but what actually matters and what most people are ignoring while retail investors are panicking, something very different is happening behind the scenes in that moment. That right now, because of the sentiment, our vision is clouded. But what is happening in the background is that, for example, JP Morgan is now accepting Bitcoin and Ethereum as a loan collateral. That's huge. That isn't hype. This isn't a rumor. This is one of the largest financial institutions on earth, treating crypto like real capital. At the same time, banks and institutions are pulling hundreds of millions into crypto exposure, quietly, consistently, and without any noise. No hype tweets, no retail excitement, just accumulation. And it's not just institutions, it's governments, wealth funds, and long term allocators are building positions in the background. They don't buy tops, they buy fear, which is what I'm trying to tell you. That's why having a long-term vision is essential. People are missing one of the biggest signs that crypto rails are being rebuilt inside traditional finance as payments, custody, settlement, collaterals, and Bitcoin and crypto aren't being treated as experiments anymore. They're being integrated into global financial system. And that doesn't happen at market tops. It happens during periods of boredom, doubt, and disbelief. This is where the big fish is working. The macro outlook points to massive liquidity and quantitative easing returning in 2026, and every single time liquidity expands, scarce asset benefits, stocks, real estate, and especially Bitcoin. You don't need perfect timing, you just need the right positioning and accumulation phase, which should happen in the times of fear, what we're having right now. And as I see 2026 being explosive and bullish for crypto, at the same time, I think this is where we would see those asset bubbles bursting and us going into deeper depression and disbelief. But for now, we would have the chance to make life-changing gains in 2026 before we actually start going downhill. So that's from me today. Thanks so much for watching. I'll see you in the next video.